Hello everyone. Welcome to the virtual class of corporate accounting. At present, we are discussing a chapter called Redemption of Redeemable Preference Shares, popularly known as RPS. In previous lectures, we have discussed full length questions with the preparation of journal entries and balance sheet. Today, I would like to cover one of the most important aspect of the chapter, and I am expecting these kind of question, these kind of calculations in final examination. This is based on the experience of reading of the previous year's examination question papers. Let us refer the question first. On your screen, balance sheet of XYZ Limited as on 31st March 2019 is given. Liability side of the balance sheet includes 2,40,000 equity shares of rupees 10 each, fully paid, amounting to 24 lakhs, 10,000 14% redeemable preference shares of rupees 100 each, rupees 90 paid up, rupees 9 lakhs, general reserve for rupees 4 lakhs 50,000, securities premium 60,000, profit and loss account 2 lakhs 80,000, creditors 3 lakhs 50,000. On the asset side of the balance sheet, fixed assets worth rupees 30 lakhs 40,000 included, investments given as 5 lakhs 50,000, bank balance rupees 4 lakhs, and other current assets rupees 4 lakhs 50,000. Total of the balance sheet on both the sides 44 lakhs 40,000. Additional information includes detail about redemption. As per the information available on your screen, the company has decided to redeem preference shares at 10% premium after making necessary provisions as per Companies Act. As per the information available on your screen, at the end of the redemption process, we are in need of a bank balance, and new bank balance in the business is to be retained at rupees 3 lakhs 40,000. It means at the end of the redemption process, we need closing bank balance of rupees 3 lakhs 40,000. This is most important information available to us in this question, or you can say this line is game changer. So concentrate on this line because we need to maintain our all calculations in such a way so as at the end we can explore bank balance of rupees 3 lakhs 40,000. All investments were sold at rupees 5 lakhs. The company has decided to issue equity shares of rupees 10 each at 10% premium in adequate numbers. In previous questions, number of shares issued by the company was given in ready-made form. But in this question, we need to issue new equity shares of rupees 10 each at 10% premium in adequate number. This adequate number is connected with this line of maintaining closing bank balance of rupees 3,40,000, and this line makes a lot of difference in our answer, and that is why solution of these kind of question is most important for all of us to understand. Write journal entries in the books of XYZ Limited and also prepare a balance sheet after redemption of RPS. That we will be doing. Now, let us move towards solution. As a part of solution, first of all, we need to calculate amount of either profit or loss, whatever it is, based on the information on sale of investments. Check the question. In the given balance sheet on asset side, cost price of the investment is given as rupees 5,50,000. In additional information, it is given that the entire investments were sold for rupees 5 lakhs. So naturally, cost price is 5,50,000, sale price is 5 lakhs. So the company has suffered a loss or yield earned, whatever it is, or you can say profit, but this profit is a negative profit. Negative profit means loss. Therefore, the company has suffered a loss of rupees 50,000. If you are not clear for the calculation, check in the bracket. Sale price of the investments rupees 5 lakhs minus cost price of the investment 5 lakhs 50,000. So there is a loss of rupees 50,000. Now you know how to pass a journal entry. Bank account debited, amount received by the company on the sale of investment 5 lakhs, 50,000 rupees for profit or loss, whatever it is, but here it is a loss. So loss is always debited to profit and loss account. In case of profit, profit and loss account should be credited. But here, these 50,000 represents amount of loss. So journal entry, profit and loss account debited 50,000 to investments goes out. So to investments account 5 lakhs 50,000. It is additional transaction apart from the regular process of RPS redemption. But in this question, sale of investment is also playing important role because our entire calculation is moving around settlement of the closing bank balance. Now move towards second important calculation, that is redemption of redeemable preference shares, RPS. As I discussed in earlier lecture, we need to follow the systematic process for the redemption of RPS. The first step is to make a final call to convert partly paid shares into fully paid shares. As per the provisions of the law, company cannot redeem partly paid shares. So if you want to redeem the shares, it is a compulsory to redeem after making it fully paid. Let us check the balance sheet given in the question. Face value of RPS is rupees 100 per share. Paid up value of the share is rupees 90. Face value is 100. Paid up value is 90. It means these shares are partly paid up. And to make it fully paid up, we need to call rupees 10 per share. So, total amount received by the company in final call is rupees 1 lakh. If you are not clear for this calculation, you can put calculations in the bracket. 10,000 preference shares were issued by the company. Final call is outstanding for rupees 10 per share. So 10,000 shares multiplied by rupees 10 per share. So amount received by the company on final call is rupees 1 lakh. Journal entry for this transaction: bank account debited 1 lakh to 14% redeemable preference share capital account 1 lakh. Now move towards next item. It is all about calculation of amount payable to shareholders. Amount of RPS capital payable to shareholders: 10,000 shares, face value 100 is equal to 10 lakhs. And as per the information given in the question, we need to redeem our RPS at 10% premium. So 10 lakhs rupees multiplied by 10%. So the amount of premium is rupees 1 lakh. In this way, the company has to pay total 11 lakhs rupees to RPS holders. We need a journal entry for the payment or amount payable to RPS holders. RPS capital account debited 10 lakhs. RPS redemption premium account debited because it's a loss for the company 1 lakh to RPS holders account 11 lakhs. With this, calculation for the amount payable to the shareholders comes to an end. Now we are entering into turning point of this chapter, because our third step, that is arrangement of fund for capital part affected by the information given in the question related to maintenance of closing balance. First of all, check the chart. We need rupees 10 lakhs for the redemption of capital part. Now we have two different options to raise the fund. First, you can issue new securities in the market. Second, you can transfer amount from divisible profit to capital redemption reserve, that is a CRR. If we have any one figure out of these two means new issue or CRR. We can calculate the second one as a balancing figure to adjust rupees 10 lakhs. But in this question, we don't know the number of equity shares issued by the company. As per given information, we need to issue new equity shares in adequate numbers. What is meaning of adequate over here? That we need to calculate using some different mechanism. Once this chart is complete with the calculation of new issue and the CRR, again our answer coming on the track that we have already completed earlier. But right now we need to concentrate on this amount because I have put question marks over here, and until and unless we can complete this figure, we cannot move ahead. So now concentrate very properly for the next phase of calculation. This is the most important calculation for all of us because we need to calculate number of shares to be issued by the company at our own. In earlier questions, number of shares issued by the company to redeem RPS was given as a part of the question. Here it is not given as an instruction, so we need to calculate at our own using supplementary informations. As per the instruction, the company has to maintain a bank balance of rupees 3,40,000 at the end of the redemption process. So you can say this is the most important point or a turning point of our calculations. Before doing anything else, let us prepare a list of amount received by the company and amount to be paid by the company. We have opening balance of rupees 4 lakhs in the balance sheet. The company has received rupees of 5 lakhs by selling the investment. It is also a receipt for the company. The company has also received rupees 1 lakh by making final call on RPS to convert partly paid shares into fully paid up. And to complete the procedure, the company has to pay 11 lakhs rupees to RPS holders. So first amount, second and third. First, second, third items represents bank balance and receipts, and fourth and last item is related to the payment. Now we need to consider the number of equity shares to be issued by the company using these figures. At present, we don't know how many shares issued by the company. Again, have a look on the important instruction. At the end, we need to maintain a bank balance of rupees 3,40,000. At present, we have opening balance in the bank account rupees 4 lakhs. We have received rupees 5 lakhs by selling our investment. We have received rupees 1 lakh in final call on RPS, and we need to pay 11 lakhs rupees. Using this information, we need to calculate number of equity shares to be issued by the company. To calculate a number of equity shares to be issued by the company, we need to prepare a table. Opening balance is available to us for rupees 4 lakhs. Add amount received from the sale of investment 5 lakhs. Add amount received on a final call of RPS rupees 1 lakh. Add issue of new equity shares at 10% premium. Right now, we don't know the amount, so I have inserted question mark over here. But it is for sure that when we will issue new equity shares, we will receive amount, and these receipt will increase our bank balance. So it is on addition part. Unfortunately, we don't know the number, and this entire exercise is related to explore the number of equity shares issued by the company. So total, again, that we don't know. Now less. Out of these receipts, we need to pay 11 lakhs rupees to our RPS holders. And at the end of the process, we need closing balance in our bank account rupees 3 lakhs 40,000. In this table, we need to calculate figures of these two question marks. First question mark related to number of equity shares issued by the company, and second question mark that is related to total receipts. Now, without any confusion in a calculation, simply use your general knowledge, or you can say IQ. Here we have figure of the payment for rupees 11 lakhs and closing balance in the bank account rupees 3 lakhs 40,000. It means we need to start our calculation from reverse order, from end. Let us check it once. If we need to make a payment of 11 lakhs, and if we have balance of rupees 3 lakhs 40,000 after making payment of 11 lakhs, it means we need 14 lakhs 40,000 rupees with us. We are not in a hurry to understand the solution. You simply try to apply your basic logic. We have paid 11 lakhs. At the end, we have 3 lakhs 40,000. How it is possible when we have total amount of rupees 14 lakhs 40,000? So keep this thing in your mind. We need to calculate in a reverse order. Now, we are aware of the figure of the total. Our total would be 14 lakhs 40,000. On the other hand, we have total receipt of rupees 10 lakhs. Don't get any confusion over here. We have bank balance of rupees 4 lakhs. We have received 5 lakhs by selling the investment and 1 lakh rupees in final call. So total receipt of the company is 10 lakhs. Grand total after issue of new equity shares is rupees 14 lakhs 40,000. So we have 10 lakhs. We need total 14 lakhs 40,000. It means the balancing figure 4 lakhs 40,000 that we need to collect by issue of new equity shares at 10% premium. I hope everybody is clear with this calculation. And calculation of these 4 lakhs 40,000 is a turning point of this solution. Let us move to number of equity shares to be issued by the company using 4 lakhs 40,000 total amount collected by the company through new issue. Amount collected by new issue is rupees 4 lakhs 40,000. Just before a few seconds, we have explored figure of rupees 4 lakhs 40,000. Face value of the share issued by the company is rupees 10. You can visit the question and find out this detail of equity share. These shares are issued by the company at 10% premium. It means that when company issue an equity share of rupees 10 each at 10% premium, the company will receive total amount of rupees 11. It is mentioned in the bracket for your reference. Rupees 10 as a face value plus 10% of premium, that is rupee 1. Rupees 10 plus rupee 1 equals to rupees 11. Now, final calculation of number of shares issued by the company. We need total rupees 4 lakhs 40,000. We will receive rupees 11 per share. So rupees 4 lakhs 40,000, that is our total requirement, divided by rupees 11 per share that we have completed over here. So when you collect 11 rupees per share including premium to collect total of rupees 4 lakhs 40,000, you need to issue 40,000 equity shares. It means the company is required to issue 40,000 equity shares in order to fulfill the condition of maintaining closing bank balance of rupees 3 lakhs 40,000. Remember, that particular line of the question has changed everything in this solution. So this is one of the most important question. Now, again we are on the track and everything is very easy for you. Step number 3, arrangement of the fund for capital part. We need total of rupees 10 lakhs. As you know that we have discussed earlier. But in earlier calculation, there were question marks over new issue and CRR. But now we are clear that we need to issue 40,000 equity shares of rupees 10 each issued at 10% premium. I repeat provisions again. For the adjustment of the capital part, we need to consider only face value of the share, not the premium. So 40,000 equity shares of rupees 10 each. So it is rupees 4 lakhs. Out of total requirement of rupees 10 lakhs, we have collected rupees 4 lakhs by new issue. So obviously we need to raise rupees 6 lakhs from divisible profit, and we need to shift these 6 lakhs rupees from divisible profit to a specialized account called Capital Redemption Reserve, that is CRR. Now, how to arrange these 6 lakhs? It is mentioned in the bracket. In the given balance sheet, we have balance of rupees 4 lakhs 50,000 in general reserve account. So, we will utilize general reserve account first. So, out of rupees 6 lakhs, we have collected rupees 4 lakhs 50,000 from general reserve. So, remaining rupees 1 lakh 50,000 collected by the company from the credit balance of profit and loss account. 4 lakhs 50,000 plus 1 lakh 50,000 is equal to rupees 6 lakhs. Total requirement rupees 10 lakhs. 4 lakhs rupees collected by the company from new issue and 6 lakhs rupees collected by the company through capital redemption reserve. 4 lakhs 50,000 from general reserve and 1 lakh 50,000 from profit and loss account. So with this, calculation for step number 3 is over. Let us pass journal entry for this adjustment. We have issued new shares at premium. So bank account debited 4 lakhs 40,000. These 4 lakhs 40,000 that we have already computed at the time of adjustment of the closing bank balance. We need total of rupees 4 lakhs 40,000, of which 4 lakhs rupees for capital and 40,000 rupees for security premium. Bank account debited 4 lakhs 40,000 to equity share capital account 4 lakhs to securities premium account 40,000. Now amount transferred to CRR, Capital Redemption Reserve. General reserve account debited 4 lakhs 50,000. 1 lakh 50,000 rupees debited to profit and loss account. To Capital Redemption Reserve account 6 lakhs. In this way, we have arranged rupees 10 lakhs for the capital part. Now move towards step number 4. Step number 4 is all about adjustment of RPS redemption premium. We know that we are supposed to adjust rupees 1 lakh as RPS redemption premium that we have already computed while calculation of amount payable to RPS holders. Now check the balance sheet. In the given balance sheet, security premium is given for rupees 60,000. During new issue of equity shares, just before a few minutes, I have discussed journal entry for that issue. We have received security premium of rupees 40,000. We had security premium of rupees 60,000. We have collected security premium of rupees 40,000. So 60,000 plus 40,000 equals to 1 lakh. We need rupees 1 lakh and now we have rupees 1 lakh. So security premium account is sufficient enough to adjust RPS redemption premium. So we need not to utilize any amount from profit and loss account for this question. journal entry for this transaction. Entire amount of RPS redemption premium is adjusted against security premium account. So securities premium account debited to RPS redemption premium account 1 lakh. Step number 4, that is adjustment of RPS redemption premium, comes to an end. Let us enter into fifth and most easiest step, that is payment to RPS holders. We have already completed calculation of amount payable to RPS holders in step number 2, and it is rupees 11 lakhs, 10 lakhs for capital part, 1 lakh for RPS redemption premium. So without wasting time, directly pass journal entry for this transaction. RPS holders account debited 11 lakhs to bank account 11 lakhs. As a part of the process, we need to enter into next phase, that is related to issue of bonus share. But in this question, information related to bonus issue is not given. In this situation, we need to avoid that step. Bonus issue is strictly followed by the instruction. So if no instruction is given, we need not to pass any entry. Let us prepare all journal entries into systematic form. The first entry is related to sale of the investment. We have already discussed. Second entry is all about amount received as final call. Third, for amount payable to RPS holders. Fourth is related to the amount received on a new issue, and in this question it is one of the most important tasks to find out this amount, because entire solution is based on this calculation. Fifth, amount transferred to RPS, amount transferred to capital redemption reserve account, adjustment of security premium for RPS redemption premium, and last, amount paid to RPS holders. Bonus issue is not connected with this question, so we will avoid that journal entry, that step, that calculation for this answer. After preparation of all journal entries, let us move towards next part of our answer, that is balance sheet. We need to prepare our balance sheet in vertical form as per the guideline given by the Saurashtra University in our syllabus. We need to follow the provisions of the Companies Act 2013. The first part of the balance sheet is equity and liabilities. This includes shareholders fund, and shareholders fund includes share capital. Amount of share capital is rupees 28 lakhs. For the purpose of calculation of this 28 lakhs, let us focus on the balance sheet. This is old balance sheet given to us. Using this old balance sheet, we will prepare our new balance sheet. Now, focus on the calculation. In the given balance sheet, 2 lakhs 40,000 equity shares of rupees 10 each, fully paid, amounting to rupees 24 lakhs are given. So we need to continue these 24 lakhs in the new balance sheet. Plus, for the purpose of redemption of RPS, we have issued new equity shares of rupees 40,000. You can check step number 3. 40,000 equity shares of rupees 10 each issued by the company. So, equity share capital of the company increased by rupees 4 lakhs. 24 lakhs plus 4 lakhs is equal to 28 lakhs. One more share capital is available to us in our balance sheet. That is 10,000, 14% RPS, rupees 9 lakhs. We are entering into this exercise to redeem the RPS. It means these shares are redeemed, paid to the shareholders. So now balance of RPS share capital account is 0 as we have redeemed all the shares. So 24 lakhs plus 4 lakhs is equal to 28 lakhs and no preference share capital rest in the balance sheet. Second items included in shareholders fund is reserves and surplus. I have already discussed in previous questions that it is one of the most important calculation while preparation of the balance sheet. Amount of reserves and surplus is rupees 6 lakhs 80,000. To derive the figure of 6 lakhs 80,000, we need to prepare a separate calculation. This is our old balance sheet. Using this old balance sheet, we will prepare our reserves and surplus. Check. Information related to general reserve is given to us in our existing balance sheet. It is 4 lakhs 50,000. During the process of RPS redemption, we have transferred rupees 4 lakhs 50,000 to CRR. You can check step number 3 to get the idea of amount transferred to CRR. Total amount transferred to CRR account 6 lakhs. Out of that 6 lakhs, 4 lakhs 50,000 transferred from general reserve and 1,50,000 rupees transferred from profit and loss account. So 4 lakhs 50,000 minus 4 lakhs 50,000. So the balance of general reserve account is 0. Now come to the second item covered under reserves and surplus, profit and loss account. Amount given in the balance sheet is rupees 2 lakhs 80,000. Loss on sale of investment. Loss always reduce the amount of profit. So 50,000 rupees are deducted from the balance of profit and loss account. For the calculation of loss, you can calculate the first calculation related to sale of investment. And amount transferred by the company to capital redemption reserve from profit and loss account is rupees 1,50,000. You can check step number 3 in order to find out the figure transferred to CRR from profit and loss account. So out of 2,80,000 rupees available to the company, 50,000 adjusted against loss on sale of investment, 1,50,000 transferred to CRR. So balance amount available to the company is rupees 80,000. During the course of this RPS redemption, the company has created a separate reserve called capital redemption reserve, and amount transferred by the company to CRR is rupees 6 lakhs. Generally, we are using these account for the purpose of issuing bonus shares, and in such a case the amount of CRR can be utilized. But in this question, information related to bonus issue is not given. It means amount transferred to CRR account rupees 6 lakhs remain same without utilizing single penny out of it. So the balance of CRR account is rupees 6 lakhs. Fourth item covered under the title of reserves and surplus is security premium. Opening balance of security premium is given on a liability side of the balance sheet. It is rupees 60,000. The company has received a security premium of rupees 40,000 in new issue. You can check step number 3. We have issued our shares at a premium. So on 4 lakhs rupees of new issue, the company has received 40,000 rupees as a premium. So total amount of the security premium account is 60,000 plus 40,000 equals to 1 lakh minus RPS redemption premium is adjusted 4 rupees 1 lakh. You can visit step number 4 to understand these calculations, as the amount of security premium account is enough to adjust RPS redemption premium account. We have not utilized anything from profit and loss account. Otherwise, we need to utilize profit and loss account as well. But for this, it is automatically settled. So the balance of security premium account is 0. General reserve 0. Profit and loss account after all the adjustment 80,000. Capital redemption reserve account 6 lakhs and securities premium account 0. So the total amount of reserves and surplus account at the end of redemption process is 6 lakhs 80,000 that we have inserted over here. Current liabilities includes amount of creditors. It is also given on the liability side of the balance sheet. Creditors 3 lakhs 50,000. No adjustment is required in creditors. So the total of the balance sheet for equity and liabilities comes to 38 lakhs 30,000. Now, second part of the balance sheet, that is asset side. On asset side, we will include first item as non-current assets, popularly known as fixed assets. 30 lakhs 40,000. This figure is ready-made given in our question. So without making any kind of calculation, directly insert this figure in the balance sheet. Second item is current assets. The figure of current asset is rupees 7 lakhs 90,000. Let us understand the figure of current assets. First of all, understand the fixed assets 30 lakhs 40,000 that we have directly exported over there. Now calculate the most important item is current asset. In current assets, two items are included. One is a bank balance, it is opening balance, but as given in our question, at the end, we need to maintain our bank balance of rupees 3 lakhs 40,000. Here, repetition of the calculation is not required. If you want to calculate, you can calculate in this way. Opening bank balance 4 lakhs plus investments sold by the company 5 lakhs. 4 plus 5, 9 lakhs. Plus final call received 1 lakh. 9 plus 1, 10 lakhs. Plus new equity shares issued by the company at a premium 4 lakhs 40,000. 10 lakhs plus 4 lakhs 40,000 is equal to 14 lakhs 40,000 minus amount paid to RPS holders 11 lakhs. 14 lakhs 40,000 minus 11 lakhs is equal to closing bank balance 3 lakhs 40,000. But we need to avoid this calculation because it is nothing more than repetition of the calculation of the closing bank balance that we have completed at the time of calculation of step number 3. In this equation, this adjustment is part of step number 3 because this calculation is important to calculate adequate number of equity shares plus other current assets 4 lakhs 50,000 as it is given in the balance sheet on asset side. So without wasting much time, directly enter this figure in our calculation. So total current asset is rupees 7 lakhs 90,000 that we have inserted over here. So total of the balance sheet on asset side is rupees 38 lakhs 30,000. Equity and liabilities 38 lakhs 30,000. Asset side 38 lakhs 30,000. So our balance sheet is settled for both the sides. Now, after this calculation, all of you are clear about calculation of how to calculate adequate number of equity or preference or any securities when the information related to maintaining closing balance is given in our question. I hope all of you are clear for this solution. It is one of the most important question from this chapter. See you in next virtual class. Thank you. God bless you. Keep learning, keep growing.